Hello and welcome to Switzer Investing Insights, brought to you by NAB Trade. I'm Peter Switzer and my colleague Paul Rickard is still on holiday, so I thought I might interview myself about where I think the stock market's heading in 2018, and in a very simple way, I think it's going towards 7,000 on the ASX 200 index. And let me tell you why. First of all, I think the most important point that I think gives all stock markets around the world a great opportunity to keep climbing higher is the fact that the great global economies are all growing in synchronisation for the first time since the GFC. And that's creating a lot of momentum. It partly explains why our commodity prices here in Australia are doing so well and why our miners have done so well. But that underpinning of a stronger than expected global economy is a real plus for stock markets. You throw into the equation the fact that the Trump tax cuts have now been accepted, you'd expect that the US economy will grow faster because of it. And even though a lot of the big US companies aren't paying even 21% company tax rate when the official rate's 36%, a lot of the smaller companies are paying close to 36%, and so the 21% tax rate will be really good for those small companies. You throw into the fact other international factors like there's a global infrastructure boom. It's just not here in Australia, it's right around the world. We've seen in an economy like Europe that once upon a time, even 2 or 3 years ago, was seen as a basket case. Now everybody wants to invest in Europe, and particularly they want to buy European banks. They were all being pressure tested 2 years ago as if they could push us into a Great Depression or something like that. So a lot of those international factors are now very, very positive. Now, the next question is, I would ask myself if I was interviewing myself, well, what's going to happen locally to explain why our stock market might head towards 7,000? Look, the start of this year, we've seen record high sales for cars. We've seen the weekly consumer confidence numbers getting to 4.5-year highs. We've seen the monthly consumer confidence numbers. If you look at the trend since the middle of last year, once again on a rising trend. We've seen the NAB business confidence and business conditions numbers in historically high levels, all fantastic underpinnings for stock market or stock market companies' profits and therefore stock prices. And you've also seen, I think, important predictions by a large number of economists that namely business investment is definitely on the improve. A lot of economists are now believing that wages will rise faster in 2018 than in 2017. We've seen also retail numbers in November up 1.2%, and some of the strongest retail numbers we've seen in a long, long time. You put that all together, you've got a story of an improving consumer sector, you've got the stronger business investment sector. All of this makes me think, gee, what the Reserve Bank is tipping, growth over 3% is a real possibility. Now, if we get that kind of growth, you kind of expect that individual companies are going to do well in terms of their bottom lines. And if their bottom lines are improving, you'd expect stock prices to go up at the same time. So I guess my argument rests on this. If my predictions on the Aussie economy is right, that we do grow, like the Reserve Bank, do grow over 3%, I think there's a very strong argument that we'll start seeing stock prices going up at a much faster rate in 2018 than in 2017. And 7,000 is a genuine possibility. So if I'm right, what kind of investment themes should we as investors be thinking about in 2018? I always look at different sorts of investors. If I'm a safe and risk-averse type investor, I think that, obviously an ETF that tracks the ASX 200 index is still a very good idea. As I've pointed out, there could be anywhere between 14 to maybe 18% return if I see the index getting around to 6,700 or so. It's always a sensible play to go for an ETF which pays you dividends. The way I invest is effectively, I do use the ASX 200 index ETF and I combine it with a dividend paying ETF, and that's my core. And I start shooting for higher returns. I might use fund managers, I might find individual companies. Paul Rickard and myself, we like JB Hi-Fi and we liked Fortescue a few months ago. they were put in my more riskier investments to push up my returns, and we got that completely right. I'm very happy about that. I also think if you want a little bit more risk to put into your portfolio, you should be diversified and going overseas. An ETF that gets exposure to Europe is a very good idea. If you're a riskier investment, I would definitely look for maybe one or two funds that are exposed to Europe, not necessarily ETFs. Good fund managers have good track records there. I also think that Asian fund managers will do pretty well over this year 2018. Not sure after 2018, but certainly this year I think that's a pretty good way to go. And I always like to look at the sectors that have struggled, and big cap have struggled in 2017. I believe the banks are going to do well. And this puts me at odds with some commentators out there. So I'm looking for making a bit of money out of big caps this year, investing in Europe, and then also just looking around for companies that look well exposed to the growth aspects that I think are going to be very, very positive for the Australian economy. That's my view on 2018. Let's look forward to seeing it hit the old index hitting at 7,000. And if so, I'll be having a very good Christmas come the end of 2018. I'm Peter Switzer. Thanks for joining us on Switzer Investing Insights, brought to you by NAB Trade.